Welcome to Her Money Revolution. I'm your host, Angela Brooks, your guide on this journey to becoming a wealthy woman. As a certified financial planner, owner, and advisor at Family Capital Management, I'm on a mission to simplify the conversation around investing and to help women generate more wealth by making their money work for them. Join me as we navigate powerful financial planning strategies to help you achieve your personal and professional goals. This podcast is your go-to destination for no fluff, easy to implement financial and investing advice. If you are ready to achieve audacious financial goals, dream beyond boundaries, and generate massive wealth for you and your family, this podcast is for you. Grab a notebook. Let's get started. Hello, and welcome back to Her Money Revolution, the podcast where we empower women to grow their wealth by making their money work for them. I'm your host, Angela Brooks, and today we're continuing our Investing Toolkit series with a powerful metric every investor should understand: earnings per share, EPS. If you've ever wondered how to measure a company's profitability or how much money a company makes for each share that you own, EPS is the number that you need to know. In this episode, I'm going to break down what EPS is, how it's calculated, and how you can use it to make smarter investment decisions. If you're ready, let's dive in. So what is EPS? Great question. Earnings per share measures a company's profitability by showing how much profit is allocated to each share of stock. It's one of the most important numbers investors look at when evaluating a company's financial health. So the formula, I'm going to give you the formula so we can kind of understand how to calculate that. But if you have a pen and a piece of paper, go ahead and jot this down. If not, don't worry. You don't normally have to try to calculate this on your own. But the formula is EPS equals net income minus preferred dividends divided by the average outstanding shares. In simpler terms, it tells you if the company's profits were divided equally among all shareholders, how much would each share earn? So let me give you an example. Let me kind of break it down a little bit. If a company earns $1 million in net income, it pays $100,000 in preferred dividends. It has 500,000 shares outstanding. Okay, so let's calculate what the EPS would be. So we take $1 million minus the 100,000 of the preferred dividends divided by 500,000. Those are the shares. That equals $1.80 per share. So this means for every share you own, the company earned $1.80 in profit. Hopefully that makes sense. If not, stop, rewind, and listen to that again. It's really quite simple if we take the time to really try to understand it. But there's different types of EPS that you're going to see in different types of reports. So when you look at earnings reports or a stock research sites, you'll see different types of EPS. And here's what they all mean. So your basic EPS uses the total number of shares currently outstanding. Then you have diluted EPS. That adjusts for stock options or convertible securities that could increase the number of shares. And then you'll have trailing EPS. This is based on the company's earnings from the past 12 months. And then you have forward EPS. This is based on projected earnings for the next 12 months. So you might be like, okay, great, Angela, what would I use? What is the best one to look at? Well, in my opinion and my expertise, I would focus on the diluted EPS for a more conservative view of a company's earnings. And again, the diluted EPS, it's going to adjust for stock options or convertible securities that could increase the number of shares. So it's just a conservative approach. So now that we understand what EPS is, how to calculate that, which type of EPS to focus on, maybe you're wondering, why does this matter? Well, if you're an investor, it matters because EPS is a key indicator of a company's profitability and future potential. And this is why I believe that that is important to understand. So when you do a profitability check, a rising EPS often signals that a company is going to grow in profits. EPS that is going up is going to let you know that a company is growing its profits. It's also important to understand it's a comparison tool. When you compare EPS between companies in the same industry to see which one is more profitable. That's something that's really important that we understand, that we want to make sure we're comparing companies in the same industry. Okay. And again, this is just one data point to look at. You really have to understand the narrative and what's going on in the company itself. So be careful sometimes comparing EPS from one company to another, and make sure it's in the same industry. Another reason that it matters for investors is the stock value indicator. So EPS is a key component in calculating the price to earnings ratio, which helps you understand if a stock is over or undervalued. Okay. So again, we use EPS to calculate price to earnings ratio, which is another really great tool to use in your investing toolkit. And we've gone through that one in previous episodes. So if you haven't listened, or if you haven't heard that, please go back and listen to the price to earnings episode. So EPS and the PE ratio. So how do you use these two in measuring value? Well, EPS alone doesn't tell the whole story again, okay? So you need to pair it with price to earnings ratio to see if a stock is priced fairly. I feel like I want to say that again for you guys. So EPS alone does not tell you the entire story of what's going on in the company, of if this is a good stock to buy or not. You really need to pair it with the price to earnings ratio to see if a stock is priced fairly. Is it overpriced? Is it undervalued? Is it, in comparison, is this still a good stock to buy? So the formula again for price to earnings ratio is PE equals share price divided by EPS. So a high PE might mean the stock is overvalued or that investors expect high growth. If it has a low PE, this could mean that it's a bargain or there could be trouble ahead. So understanding more of the story is really important. EPS growth, a real indicator of success. So it's more important than just the EPS number, is its growth over time. So if you look at companies with a consistent EPS growth year after year after year, what does this mean to me? Well, it means that it has a strong management team, that it's increasing market share, and that, it could mean that there's long-term profitability for this company. Those are really great indicators for a good reason to buy a certain stock. So when can EPS be misleading or not something that, you don't know the whole story and this is not a good time to buy? Great question. Share buybacks. So companies can multiply EPS by buying back shares. And they do that to reduce the number of outstanding shares. So that kind of creates, or does create, an artificial boost to earnings per share, right? So be mindful if companies are buying back their own shares. Another thing that EPS could be misleading is that if there's a one-time gains or one-time losses, a company might have a sudden spike or a sudden drop in its EPS from selling an asset, which doesn't reflect its core business performance, okay? So be mindful of that. Another misleading thing with EPS is accounting tricks. Unfortunately, some companies use really creative accounting to inflate their EPS. So always look beyond the numbers. If you feel, ask your financial advisor or do a little bit more research if you're putting a lot of money into one particular stock. Don't just look at EPS. Don't just look at PE. Understand more of the story. So I always check EPS trends. It's if the company is consistently growing its earnings over time. I also compare EPS across other competitors to see which companies are truly profitable. And when EPS and revenue, when their growth is aligned, that's when I know I found a strong investment opportunity. I also use a very robust scorecarding metric, and I say I, but myself and my investment team, we use a very, very robust scorecarding metric. We put lots of other data into it and see how it scores that way. But if you just have EPS, is it being consistently growing over time? Comparing to other companies, how's the profitability look? Those are things that you want to watch for. So now this is a little bit of context here and maybe a lot to take in. So here are some key takeaways that we want to really be mindful of. So EPS, what does it do? It measures profitability per share and is essential for evaluating a company's financial health. EPS growth over time is more important than number alone. And when you pair EPS with the PE ratio, it gives you a full picture of value. We want to be aware of EPS manipulations, right? Through buybacks or accounting tricks. So be mindful of those things. That's all I have for today's episode of Her Money Revolution. I hope you feel empowered to use EPS when analyzing stocks and making investment decisions. If you like this episode, please forward it to somebody else. Send me a DM. I love hearing from you. Click below and subscribe here. But please subscribe. Your support helps us reach more women on their journey to wealth and financial empowerment. So I really appreciate you tuning in. Until next time, believe in your power to build wealth and bless others with your knowledge. Thank you for joining me today, and I hope you are feeling more empowered in your financial journey. Remember, follow and subscribe to Her Money Revolution on your favorite podcast platform, and share your feedback by leaving a review. I'd love to hear your biggest takeaway from today's episode. Until next time, stay inspired.